Landlords and real estate investors are buying almost half as many houses as they were a year ago, but they also are selling a lot less houses as well. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have an interesting article for you today, and it's going over the fact that landlords, real estate investors, they have slowed down a lot. Okay, the current market means that interest rates are much higher than they were just a year ago. I mean, if you look back a little over a year, interest rates were, a half or a third in some cases of what they currently are. So, yeah, there's going to be a lot less activity because there were a lot of people in the market who were dependent upon those super low interest rates. Now, I admit, personally, I had done all my math based upon interest rates being at, low rates continually. I never expected rates to get above 5%, but I was just wrong. I was wrong, dead wrong. And, even though I did predict there would be a lot of inflation due to all the government stimulus that they had put out there, I didn't expect interest rates to rise quite so high. And it looks like they're only going to be getting higher in the short term, at least. Okay. So I don't imagine that rates are going to get back down below 5% for at least a few years, at least. Okay. We might not see it for 10 plus years, but we need to really start looking at, hey, what is our investment strategy going forward based upon these higher interest rates? How are we going to be able to profit as landlords if when we borrow money, we have a loan where we're paying nearly 10% interest? It's a completely different market than just a few years ago. So, yeah, this isn't easy anymore. This isn't easy and cheap money like we are used to seeing. And a lot of landlords, they're backing off because of that. So before I get into the article, go ahead, hit the like and subscribe button, maybe leave a comment down below. Let me know what you think. So are you surprised that a lot of landlords have decided to neither buy nor sell right now? They're just sitting still, kind of waiting to see what happens. And what exactly is your strategy going forward? Are you looking to buy real estate? Are you looking to sell any of your real estate? Have you slowed down your buying and selling? I know I have. I normally buy, one or two properties per year. At least I have for the last 10 years, right? And this year I haven't bought or sold anything. And, if I do sell, it would be using the 1031 exchange. So I'd be buying a property as well. But I really am holding back because I want to make sure that all my finances are 100% before I jump into another investment. Okay. So I'm just curious what the other landlords, the other real estate investors who watch this channel, what they're doing right now. Anyway, let's get into this article. This article is coming from redfin.com, and it says real estate investors pull back, buying 45% fewer homes than a year ago. Let's see what it says. The drop in investor purchases outpaced the 31% decline in overall home sales. Investor market share is down to 16% after hitting an all-time high of 20% in the first quarter of 2022. Investors are also making up a smaller share of the home selling pie, with 8% of new listings owned by investors, down from a peak of 13% at the end of 2021. Investors are gravitating to low-priced homes and single-family homes, though investor purchases of single-family homes declined year over year due to limited inventory. Investor market share and investor purchases retreated most in Phoenix, Las Vegas, and other Sunbelt metros, as those places boomed during the pandemic and have a lot of room to fall. So looking at those statistics that I just read, a lot of this stuff, it isn't very surprising whatsoever. It isn't surprising that, Phoenix, Vegas, and other Sunbelt cities really are falling because, like they said, they do have the most room to fall. They had the biggest boom after all. And, I lived in Arizona. I dealt with the big booms from, not the pandemic, but the 2008 recession. They just had a huge upward trend after that, right? And right before the recession, they had a huge boom. So it seems to me that when it comes to real estate investment, Phoenix in particular is a boomer bust town. I mean, I made a lot of money when I sold and I got out of there, but I just knew that the top of the market was approaching, and it looks like I was pretty accurate at that. I don't think that they were at the top of the market when I sold, but I made my money back and more. So I was perfectly satisfied selling at that point. Now, when they say that 8% of the new listings, part of the home selling pie, are being sold by landlords when it was 13% before, that means that landlords are selling a lot less of their properties than they were before. And I think what is happening is we're holding on to our low interest rates. Okay. That's what I'm doing. That's part of the reason that I don't want to sell. I know that if I sell my property that has a 3.75% interest rate on it right now, and then I trade up, I'm trading up to a 8% interest rate. And that sucks. Okay. Even if I do end up with a property with more units. So the numbers have to work. And as of right now, I'm not seeing a lot of properties that meet my criteria. And I think that's the same thing that a lot of other landlords are as well, seeing as well. So, yeah, they mentioned there that investors are gravitating to low priced homes and single family homes. And that was something that I was looking to do as well because, like a lot of the commercial properties are financed through commercial loans. And I really want something that has a long-term, fixed rate mortgage. Well, I'm looking at my next property instead of it being a large multifamily, where I have to get a commercial loan. I'm looking at maybe just buying another single family house or two. Okay. I still have two more mortgages that I can get using just traditional financing. And then I hit the 10 loan limit at that point. So, yeah, I might switch over to the point where, I buy a couple of single family houses at the 8% interest rates because, I can get those long term fixed rate mortgages. And then, at some point in the future, if mortgage rates decline, I could just easily refinance and I could be able to sell those properties with, because they're not bundled together under a commercial loan, with, um, certain restrictions on it. I think it would be easier to sell them in the short term as well. So, I might look at that. I might do a fix and flip project or two, just something where I'm not holding on to the property for a super long term. Right now, my strategy is to purchase a property, hold on to it for about 5 years while I get some form of appreciation, and then either refinance it or sell it at that point, right? But I don't know if that strategy is necessarily the best going forward with these higher interest rates. And, I think I speak for a lot of real estate investors, and I'm just trying to wait and see, figure out, how to work this new economy that we're living in. Investor home purchases fell 45% from a year earlier in the second quarter, outpacing the 31% drop in overall home sales. That's the biggest decline since 2008, with the exception of the quarter before when they dropped 48%. The decline comes as this year's relatively cool housing and rental markets makes investing in homes less attractive than it was during the pandemic driven home buying frenzy of 2021 and early 2022. Yeah, and we're just going to see a slowdown. We need inventory if we want to see housing prices decrease. We need a lot more inventory out there, and I just don't see that sort of inventory just suddenly appearing, especially with just the way the economy is working right now with the interest rates right now. It's discouraging builders from building houses in large scale. Okay. And our population in this country is still increasing. It's increasing every year. So we need more housing. But, just the profit margins aren't there yet for at least home purchases. Now, There is one area where I think there is still room for growth, and that's in, the large multifamily rentals. Okay, but I don't want the country to move to being majority renter. I would like there to be more homeowners in this country than there are renters, and I personally believe that is a makes for a more healthy economy overall. Now, that's not everyone's belief, but I personally I want the economy to be strong. I want more people to focus on home owning. Yes, I am a landlord, and yes, I own rental properties, but I feel like the weaker the overall economy is for the country, the worse it will be for us landlords, right? So that's part of the reason why I want more home ownership, more houses to be built. I want houses to be more affordable. I want the middle class to be strong here in the country, and then I'll be able to get the best tenants possible who are able to pay the most for my rentals. Okay, yeah, it's kind of a self-serving thing, but what do you expect? I'm a capitalist, all right. This is according to a Redfin analysis of county records across 39 of the most populous U.S. metropolitan areas. We define an investor as any institution or business that purchases residential real estate. When we refer to a record, the record dates back to the first quarter of 2000. This data is subject to revision. A more detailed methodology is at the end of this report. The drop in purchases has brought the total number of homes bought by investors below pre pandemic levels. Real estate investors bought roughly 50,000 U.S. homes in the second quarter, the fewest of any second quarter in 7 years, with the exception of the start of the pandemic. This data is seasonal, with investor purchases typically hitting lows in the first quarter, then peaking in the second quarter. So, yeah, even the corporate landlords are slowing down right now. The big landlords are slowing down, the little landlords are slowing down, everybody is slowing down. We have to deal with the fact that interest rates are up, that we cannot operate on the same strategies that we were using before, and that this is a very, very different market than just 2 years ago, or just 1 year ago. So yeah, what is your strategy? What are you doing right now? Put a comment down below and let us know how exactly you're dealing with these super high interest rates.